Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the euro currency. So in general, the setup that we discussed recently with the upside retracement that we suggested that it probably should be a bit more extended worked nice. So you can see this upward continuation has happened recently. On the dollar index you probably will see the same, approximately the same picture, and currently it's a lot of questions appeared on the market. So what should be our next step? It's just because here is a few contradictory factors exist. So first of all, the first glance you could suggest deeper retracement. Why? Because market has formed bearish reversal swing here, and usually after previous strong upward action you suggest deeper retracement. So from the technical point of view, this is precisely might be the top of the right arm of this head and shoulders. At the same time, you could see that market keeps relatively equal retracement on the way down. So since we have the channel on the following time frame chart, this is obvious. And currently you can see that this already has completed. So the harmonic retracement is done. Besides, if you take a look at 10-year yields, you could see that although we do not have the rising of the yields right now, it shows the pen consolidation around fib level. And this is usually stands in favor of the further upward action, which means supportive to the dollar and which means bearish for the euro currency. Today minutes will be released and it could become the driver for interest rates. Besides, currently already investors start revaluing their view on the interest rates, increasing the chances that rates will not be cut in summer and maybe even could be raised. So I do not know whether they are watching our researchers, or they just listen for the former financial minister in the United States, Mr. Summers, but that's the fact. So finally investors start getting that everything stands a bit different compared to what they thought. So it means that right from here it might be the downward continuation. Besides, we know that the weekly trend stands bearish, and any pullback on the daily chart could be treated as a retracement on the weekly chart. So this is first moment. Now on the fall time frame chart, you could see that, well, this performance looks nice, but on the fall time frame chart you could see market has formed the bullish reversal swing. So which should be bullish, and theoretically it should mean that we should get further upward continuation, right? So after retracement, it usually happens. But at the same time, if you take a look at the structure of the performance inside of the channel, you could see that market was forming this kind of reversal swing very often. So here was reversal swing, you can see just collapses followed. Once again, here was reversal swing, downward action. And that, well, makes you a bit have some doubts on the perspective, whether we will get a real upper breakout here, or could we rely on it, suggesting that we should take the long position. So lots of questions appeared right here. At the same time, with this performance that we have actually to the upside, market has completed our OP that we discussed, and it was really very nice without any deep retracements, although we have warned that this might be. So an usual acceleration to the OP means upward continuation to the XOP when the market shows the acceleration to the first target. ABCD is still valid. So taking in consideration all this stuff, that some points of these sounds contradictory to each other, what we should do in the current circumstances? Well, personally, I prefer to wait in the current circumstances, reaching all the daily confidence resistance level, by two reasons. First of all, because this is really strong level, and this is normal reaction for the market that completes the major OP on the daily chart. Since we have this ABCD, if you remember, we traded based on this hand and shoulders pattern and so on. And 30% retracement is nice pullback and reaction on the OP. It is not really too big, it's sufficient, absolutely normal. Very often market shows even stronger reactions on the OP. Second, if you take a look at the hourly chart, we have the XOP, here with the target around 108.76, which is actually agrees with the confidence resistance. So that will be not just a confidence level, but also will be agreement resistance. And that provides really great background to consider taking the short position. Because as usual, as I talked about this every time, that if even we are wrong and market will break it to the upside at the first touch, we probably will get downside reaction because level is really strong. Overall price action right now is not very strong. We don't have something of this kind. That's why downside pullback here is highly likely. And that in turn led us to place the tight stop and move it to the break-even. This is advantage, and that's my choice why I prefer to watch for this area. If you would like to take the short position right here and you think that market could start dropping right from this level, this is also possible. We can't exclude it, especially if the minutes will be really hawkish. It would be better to wait at least for some, I don't know, maybe pattern will be formed or something. It will become clearer that we are not going into the XOP, because at current moment, take a look, we have some kind of the pennant is forming. When it's forming the pennant, it is potentially bullish continuation pattern. And in this pattern in place, it is not a good idea to take the short position. So it should be something different. So maybe the butterfly will be formed, market start dropping, minor hand and shoulders. That will be at least something that you could use. And might be as a confirmation that market could start dropping right from this level. That's just 2 moments in the current situation. Speaking about the taking long position with this upper direction, theoretically it is possible because daily trend stands long, and if you trade on intraday charts with your using the daily time frame as your trend indicator, trend direction, it is possible to do. Well, in this case, you probably will not need to place too far stop. So watching for this pennant and see what will happen. Using the levels that you could consider, stands on the fall time frame chart, as 2 levels that probably you could use to hide your stops if you intend to go long. Obviously, market should not drop below these lows. I suppose that for the short-term bullish context, this is invalidation point. So it doesn't make sense to consider low standing levels because market should not erase the upper direction to OP. It should not show too deep retracement in the current circumstances. Otherwise, it just makes no sense to consider taking the position. Also, you have to check the distance to the OP and your potential stop where you're placing. So for the risk-reward ratio, whether it makes sense and where it's better to take the position. But all this stuff is a scalp trading on intraday charts and not quite relate to our major scenario. So in the current circumstances, for the short entry, I would consider still this level. Although I'm not excluding that this might be a reversal if we really will get hawkish Fed minutes in today's session. But this level is more reliable, and from technical point of view, it's much better for consideration. Besides it, you can see currently on the daily chart, formally we do not have reasons to take the short position immediately because we have the daily bullish trend. Only if you trade on a weekly daily basis, when you use the weekly chart for a direction and use the daily chart for entry. If you trade on a daily intraday, then your context stands bullish, and currently it's still too early to consider taking any short position. So as the bottom line, I hope I'm not confusing you too much. So for taking the short position, I prefer to wait for this level. For taking the long position on the intraday charts, it is possible, but do not consider any levels below this one. And to keep bullish context valid, market should stay above these lows. So for entry, you could consider probably only these 2 levels. First one and the confidence. If market breaking down, in this case, short-term bullish context will be erased, and it's really become the chance that we could get downward continuation right from here, not from high standing levels on the daily chart. But this will be already now our next step, depending on what performance market will show today and tomorrow.